special note on paving the path to Viksit Bharat, strategic insights into microfinance and sustainable development. And to make the presentation, may we invite partner PricewaterhouseCoopers. May I invite Mr. Vivek Belgavi from PwC to kindly make the presentation. Ladies and gentlemen, we now begin with our lead presentation, and may I invite on stage Mr. Vivek Belgavi from PwC.
Good afternoon, ladies and gentlemen. I know we had a break and we have people coming in, but I thought I'll just get started with the next opening session. The session today we have is paving the path to Viksit Bharat. That's right. Sure, sure. Yeah, I was just allowing for understood. Understood. Sure. First up, thank you so much, Sa-Dhan, for giving us this opportunity. As PwC, we are proud knowledge partners behind the event. My name is Vivek Belgavi. I've looked at fintech alliances, ecosystems during my whole journey with PwC. As part of the journey, I've had the privilege of working with state and central governments, with entities like SIDBI, with many startups, with many incumbents as they are working on creating these ecosystems. But more specifically, as I was reflecting on my chat today, I was reflecting on my last 3 years experience where I have spent every month a few days with a small village in Maharashtra and have got quite intimate with the kind of life in that village and their specific nuances. And I was trying to connect. And in India, we are built of many such villages. Our collective experience would be whole, but each experience also kind of contributes to that whole. And in this village, probably it's a village of around 500 households today. Uh, Farming, agriculture does remain a mainstay, but I would be hard pressed to find someone who's completely dependent on the farm. Most of the people I engage with are 50 plus. Their kids have already left that village. They are starting to work in cities. They are still come back to that village. So I'll just take that as one small reference point with few of my thoughts I want to share today and try to bring it back to the whole story. One key aspect on Viksit Bharat was really built on 4 key pillars. One pillar has been how do we become a $30 trillion economy by 2047. The second pillar has been how does this growth be inclusive. The third pillar is the world is changing. Environment and green initiatives are center and front and center of this growth. How does that become front and center of our economic growth? And largely, how does it happen in a right governance and inclusion manner? My job task by the organizers today is to see how this vision of Viksit Bharat is relevant to what this conference is all about, to how the work the MFIs are doing should get mapped onto to these four. I'll start with pillar one, which is really setting up the ambition of saying we should be a $30 trillion economy. And I was reflecting on it, I was looking at the MSME space. We got 60 million plus MSMEs, contribute to almost 30% of GDP. Assuming a lot of our constituencies in the MSME or the sole space who are underserved, low-income household, a fair bit of it will get covered in this constituency. They're employing almost 110 million people. The data point we also have is MFIs have touched almost 60 million borrowers, which is a fair chunk of this. But the debate here is, as the economy is growing, is our core constituency shrinking? And is it, if it is shrinking, so to speak, are we supposed to evolve with it? That's one food for thought there. Second food for thought linking to my village story was, I know of all the people in the village I've been engaging with, their lives have been touched by MFIs one way or the other. The question in my mind is, are their children's lives also touched by MFIs? Is there a part of that journey, or even the villagers I'm talking to, as they have grown, is it expected that they will come out of MFIs and come to other financial institutions? Or do MFIs still have a role to play in their journeys, their families' journeys as they move forward, which can be one counterpoint to say, if the constituency is shrinking, how do I keep on reinventing myself? The second pillar is around inclusive development. I think by the mission given to MFIs, there is a natural mandate for inclusive development. However, the inclusive development at some point was relevant when we said new to credit or new to a banking ecosystem. Now, some of those problem statements have really changed. Whether it's a Jan-Dhan program, whether it is the fintechs and others who are really capturing a share of new to credit, does the problem go away? Probably not, right? So probably it is for us to redefine what does it really mean from a financial health perspective. Is the inclusion truly happening? Or are there new goalposts to be set for inclusion? One aspect which I felt MFIs always mastered at was tailoring the products to the customers. Because the kind of constituency we work with, the livelihoods are so diverse, the backgrounds are so diverse, the financing needs are so diverse that we had to really tailor. So that's one strength I think we should really hold on to. But what aspect can we borrow from the rest of the industry? In my mind, it's around ecosystems and getting embedded into ecosystems. Because when we are financing, and I just take financing as one bucket, and I'm aware we do a lot of other things beyond financing, and if I could see the sponsorship as well as stalls outside, clearly insurance has got embedded into this whole value chain quite deeply. Leveraging the ecosystems from a broader perspective, if we are working on agri, parallelly agri stack is getting developed. There are many players who are now working on integrating agri value chains. How do we get embedded into it? Healthcare stacks is getting developed. Healthcare value systems are getting digitized. How do we get embedded to it? Government is creating a lot of digital initiatives. How do we get embedded to it? Is the work happening? Answer is yes. Can it happen slightly more, slightly widespread? Probably the answer is yes. And there, embedding into those ecosystems will probably give us the next phase of opportunities. The next pillar I really wanted to talk about was of promoting green initiatives and environment. We will have some of the panelists talking about in the next panel as well, but at a very broad level, we do think economy is under transition. Energy is getting transitioned into new ways of doing energy. Food production is getting transitioned to probably sustainable ways of producing food. Like, I know the mass still remains in a kind of an old economy, but the economy itself is changing, both globally and in India. Now, for the grassroots level, our constituency where we are working, for them to participate in this economy will require new set of skills, will require new set of capabilities, will require them to get embedded into new value chains, and which is where I think this constituency has a role to play, whether it's on the EV side of things or whether it's on the sustainable agriculture side of things. The last pillar of the Viksit Bharat has been enhancing governance, which is a very critical one. Even the most recent speak by the RBI governor, there are concerns being raised on saying we have removed the interest rate caps, but we would want to monitor it closely so that it's not getting misused incorrectly. And we have seen the industry goes through its ups and downs. Personally, we believe that today we are on an up wave. But this is the wave to be the most cautious about, to say the governance is tight and the governance is broadened. Right? So do we have diversified advisors board with us? Do we have diversified source of capital? Do we have a diversified source of partnerships? Because those really impact, it's a partnership at after a while, or your customers who hold you accountable. If we have diversified that, and of course these forums are quite critical to be the voice of the industry, then we have slightly more safer, securer to say we have got better governance or continued better governance in play. So in summary, I think we got fantastic 2 days of networking, of listening, learning, and taking something away after the whole session. I'll just end my talk to say this is the opportunity to redefine what MFI means. The purpose doesn't change. However, the constituency, the demands, the economic activity that we play in is fast changing. It is an opportunity for us to redefine over the next 5-10 years what does MFI mean in contributing to the larger economic growth and for the Viksit Bharat ambition of 2047. Thank you.
Thank you so much for the presentation, ladies and gentlemen. That was a presentation by our partner, PwC. We now move to our plenary session, and may I request you all to kindly join me as I invite our esteemed speakers onto the stage. May I invite the moderator of the session, sector expert, Mr. Vijay Mahajan. May I request you, sir, to kindly join us onto the stage. May I also invite on stage CGM PNB, Mr. Amit Kumar Srivastava, Warm welcome to you, sir. May I also invite MD and CEO Unity Small Finance Bank, Shri Inderjit Camotra. Warm welcome to you, sir. May we also invite on stage co-founder Pahal Microfinance Limited, Ms. Purvi. May I invite you on stage, ma'am. Warm welcome to you. And may I also request CEO Muthoot Microfin, Mr. Sadaf Sayeed, to kindly join us onto the stage, and also inviting Senior Research Fellow and Co-founder XKDR Forum, Ms. Dr. Suzanne Thomas. Warm welcome to you, ma'am. Ladies and gentlemen, plenary session 1 is on sustainable microfinance as a catalyst for inclusive development and growth. And may I now request the moderator of the session, the sector expert, Mr. Vijay Mahajan, to kindly take over.
Thank you. Good morning to all of you. It's a pleasure for me to come to a Southern National Conference, I think after a break of several years. I think I was probably here last in 2016. I retired from basics in October 2016. So since then, I've kind of not been very much in the sector. It's good to see several faces whom I knew earlier and many with whom one had worked for decades, like Mr. Brijmohan, Mrs. Mini Bedi, I can see right in front, C.S. Reddy, and so forth. Many others, and then some younger faces who become older, like Sadaf and Susan, and then many new friends. I just met Mr. Amit Srivastava and Inderjit and Purvi. So you've just attended the inaugural section, and in any case, we have a context to this conference. You are already, I think, very much aware of the current situation of the sector, and there are many pressing concerns. Some institutions are facing, high NPAs, high compared to microfinance standards. Others are facing regulatory action. Still others are facing various other types of hurdles. In some ways, one can say, what's new? ये तो हर 4-5 साल होता है. But when it happens, it is a matter of concern. And so in that context, I don't want you to think that we are a bunch of Neros who are going to fiddle while Rome burns. We are going to be very much linking our contemporary operating reality, taking full stock of it, and then still dealing with a desirable future, the one that Vivek Belgavi talked of, which has been named Viksit Bharat. There's a single goal that is often talked of, a $30 trillion GDP by 2047. I wish in the same breath we at least put 3 or 4 other goals, because, we've learned in the 20th century that just chasing GDP growth is a road to hell. So along with GDP growth, we should in the same breath, Vivek, if you are around, are you still around, Vivek? Yeah. Along with the same GDP growth, we should talk about how widespread is that growth. So not just per capita income, but what is the Gini ratio? What is the distribution of income in the economy? And that's just one part of it. But then, what does that income translate into quality of life? So the Human Development Index at the least. And what does it mean specifically for women? So the gender version of the Human Development Index. But then we also have a huge problem of social dissension, durbhavna is the best word I can find in Hindi, which is spread not just in India, all over the world. And unless we come up with an index of social cohesion, we may have a situation where everybody's per capita income is great, but we can't get out of our homes, as happened in Johannesburg 20, 30 years ago. You can be rich and be afraid all the time. So we need some measure of social cohesion, social order. Then, of course, we need to be concerned about the fact that all said and done, the planet doesn't just belong to the Homo sapiens. It belongs to all species and indeed to inanimate objects which constitute nature. The jal, jungle, zameen, the rivers, the rocks, all of that. And therefore, unless we have a key indicator for the environment, we can't really envision a Viksit Bharat. And so, of course, things like what are GHG emissions, but many other parameters. So it becomes more complex. The only reason I thought I'd give you this little counter talk is because I can understand that, when we have to raise a vision, it should be compact. So $30 trillion sounds great because we are at 3 trillion or 3.2, whatever today. So 10 times in 2047. But we must also take into account our lessons, not just our own, but that of the United States, that of European Union, that of China. That mere pursuit of GDP growth is for morons. And if we don't want to be a nation of morons, then we need to also worry about economic income distribution, about social cohesion, about environmental conservation, and so forth. So with that, I will now come back to the topic, but I just thought I'll link it with your talk. Thank you very much for giving us an overview. And may I request Inderjit, the MD and CEO of Unity Bank, to, in a sense, from his CEO's vantage point of a very running operational entity, talk about both the issues, where we are today, the feet on the ground, but where we want to be, your head in the clouds. Inderjit, I'll let you speak for 10 minutes and then just remind you politely, and then 2 more minutes. All of you will get 12 minutes. Thank you.
Thank you, Mr. Mahajan. Hi, good morning. All of us are assembled in this plenary session for the great institution of Microfinance of India. First, I think we should give ourselves a clap that Microfinance India is recognized. Microfinance has seen many cycles. Every down comes with an up. Many of you have seen how the things contract and how they expand thereafter. Presently, we seem to be in one of those cycles. But nothing happens for the better without having a dark night before the dawn sets in. So that is the theme with which I want to speak to this plenary session today. Indian microfinance, South Asian, has been recognized as the model which empowers the backbone of every country for growth. The poorer, underbanked, mostly women, that's the cohort which makes a country strong. India, from today, is not going to reach the third highest GDP country in the world, and we will not reach our goals of 2047 without this institution being greater and better and more momentum behind it. That is the onus that this group, all sitting here, it rests on our shoulders to deliver, because we are very integral stakeholders of microfinance in India. Right from planning, execution, funding, government policy, regulation policy, it is us and really nobody else. Whether it's the banks or the NBFCs or multilateral agencies, to actually chart this chapter which will make microfinance great. Just to take you into some numbers, which all of you know, we presently have about 4 lakh crores outstanding. We have 12.5 crore active microfinance loans with 6.5 unique users. The rate of growth this year, the past 12 months financial, has been 18% compared to 23% last year. So we have flattened a little bit. 18% is still very good. And we will delve into what we need to improve and how collectively we will do that. But before that, I want you to know from our demographics and data, we do extreme data mining. My colleague Praveen Saha is here, who heads microfinance for the bank. Thanks, Praveen. We find it is no longer the silent generation which borrows from the banks and the NBFCs. It's not that 55-year-old rural artisan, household, fisherwoman, Kiryana shop, or some small handicraft owner who is borrowing from us. We have a very healthy mix of Gen X, which has started borrowing from the organized microfinance sector. You know, we always hear of Gen X, millennials, in the context of very snazzy FMCG pitches. Maybe health and fairness products, maybe high-end food. But no, in microfinance, the Gen X has started becoming the largest component of our users. That is because social media is not restricted to just cities. Every household has a phone. Our data points show us most MFI borrowers have a smartphone in their house. It might belong to their son, it might belong to their husband, it might belong to her. That's how the access is got. And the demographics of this is now moving even to millennials. To just remind you, the silent generation are the people who were born before 64. Gen X, the ones born after 1980. And the present millennials who were born after 96. And they're not using these microfinance loans for what we think as traditional. Our borrowers are upskilling themselves. They're using the loans for trades and crafts which their moms had used before them and then adding to it. They have now accessed, if, for example, if it was a fishing village with a group of 16 fisherwomen who had borrowed from us, they're not going to the market with a tokri on their head to sell the fish anymore. They have tied up with the food chain. They have tied up with Licious. They've tied up with Fresh to Market and other similar online enterprises to have that collective pricing advantage. They give the supply and these aggregators collect from them. And how has this been enabled? By education. By their children telling them how it is done in this generation. That is where the MFI industry has to move. You know, a little later in the 10 minutes Mahajan Sahab has given me, I will come to the slide underbelly. But right now, let me tell you the positives of what your loans and reaching out to the greater households of greater India is helping. We collectively can actually lift the economic burden from a very large number of people in India and bring them little better into the economic strides which our country is making. So on this note, I want everyone here to feel good that what you're doing is actually helping. It is, yes, we do it for economic profit. I'm not embarrassed to say that. But we also do it for reasonable economic profit. We free these women from the clutches of unorganized lending, which would have been a lot worse. So that is the way we are growing. And I want your policy makers and strategy makers to remember this, that microfinance has evolved, just like industry in India has evolved. And it's becoming a greater good for the people with whom we work. At the same time, we cannot be fair to ourselves in this session and say all is well. I think there are two main issues which our industry is facing today, and we will address them in different workshops we have during the next 2 days. The first, I would think, is over-indebtedness. We have given far too many loans as a collective to that poor woman who earns only this much. See, when we sit in our rooms, we all say maybe 3 loans is the maximum a person can bear the debt. In other rooms, we'll say maybe she can service a loan of up to 1.5 lakhs collective. We have gone all out in the last 3 years. We've gone absolutely berserk. I use the word berserk. Indian microfinance has doubled its outstanding in the last 3 years after COVID. Which industry doubles outstanding in 3 years? As a banker, I mean, it's warning signals all over the place. It just means we have gone and given loan after loan to the good performing woman to make her over-indebted. So she really can't pay the 7th, 8th, 9th, maybe 10th loan she has taken. We have to self-regulate ourselves. You know, Paul and I often sit in our banks association and deliberate about this. It's time to self-regulate ourselves very, very soon, because you can't kill the golden cow or the hen. It's not fair to the receiver, it's not fair to the institutions. So I'm sure the next 2 days we will come out with some guardrails for ourselves and self-regulate ourselves. The other thing we find in microfinance is
you have 2 more minutes.
Is a lot of wastage of economic effort in both giving the loan and collecting the loan. There's too much operational cost. That's why our interest rates are high. We have to move to payment methods under UPI and the new government initiative of Unified Lending Interface, ULI. I, from my bank side, from Unity Bank, will ensure we do that. And I will request all of you and your bankers to do that to reduce the cost of transaction, thereby the end cost to your borrower. The credit costs have gone up, but I started by saying that credit costs will automatically come into control once we lend reasonably, at reasonable rates and in reasonable amounts. So, Mr. Mahajan, with that, I'll hand back to you with one thought, that we today have to strive collectively to get our microfinance industry back in its glory days, and then work towards raising it to make it maybe 5-fold, 7-fold in the next 10 years, so that we collectively can march towards the 3rd largest economy in the world and participate jointly.
Thank you so much, Inderjit. Both both for sticking to your time, but more importantly, speaking, telling us about the realities on the ground, including some of the mea culpas that all of us have contributed to, but also ending with a very hopeful note and suggesting some ways how we can get from here to there. Thank you so much for setting the tone, Inderjit. May I now move to Sadaf, who heads Muthoot Finance. And as you know, they came from a mainstream financial entity, gold loans, to the microfinance sector and have a very large operation. So Sadaf, if you would also particularly tell us about how you are trying to make a digital transformation to address some of the issues that Inderjit mentioned, reducing costs and also better monitoring. Thank you.
Sure. Thank you very much, sir. I think, first of all, it's a pleasure to be on this panel and, of course, being moderated by Vijay, sir. I think he's the mentor of many in the industry and has been a visionary in microfinance field. I think we again find ourselves in the cusp of another kind of a crisis, and that reminds me of a saying that more we change, the more we remain the same. But I think one thing that I want to put out there is a lot of good work has happened since the last crisis we saw. When in 2010, when it was called that's a doomsday for microfinance, we did not had any SRO. I think thanks to a lot of visionary work that Vijay sir and a lot of the other stalwarts in the industry have done, we have now very active 2 SROs. We have a very robust credit bureau system where reporting of all the borrowers, 8.5 crore borrowers is happening. And we are probably the only industry where the reporting of the data is happening on a daily basis. So almost 70 to 80% of the microfinance information is getting updated on a daily basis. So from that aspect, we are very strong. Most of the companies, a lot of the companies, including ours, have listed. Many companies are having a very healthy balance sheet, running a capital adequacy ratio of in excess of 25%. So from that perspective, I think things have moved. The government has also taken a lot of good initiatives like Aadhaar, Jan-Dhan, and mobile, which is available for everyone. So identifying the customer is very, very easy. I'm sure more and more companies will adopt to eKYC in coming days. We will have a more granular clarity on what the borrower is taking, where the loan is. So I think things are much more in terms of robust in the ecosystem. I think the responsibility is on the lender to adopt it. Coming back to the task that Vijay sir has given me, and I think Inderjit sir also mentioned very eloquently, that I think we have to recognize that microfinance is no more a novelty of creating access to finance. I think access to finance with the digital infrastructure that is in place, with so many fintech players, banking, leveraging with the fintech players and BC partners and many other type of partners, that access is very well created. So I think that novelty that microfinance keeps kind of speaking about, that we are creating access to finance, I think that is there, but I think that is losing relevance by the day. So what do we have to do next? I recall my days of microfinance 15, 20 years ago, when we used to give a loan, the borrower used to sign her agreement for the first time. A thumb impression used to be used, but we used to ask her to sign. So she used to feel so elevated and liberated that I am signing for the first time. I think this kind of feeling I just noticed last couple of years when we were helping our clients do their first digital transaction. I think that is where the space is. Today, I think Inderjit sir also mentioned the penetration of mobiles is very, very huge. I can share a few of the data points in terms of our operation. Like if you look at the household, almost around 76% of the household, we cater to around 3.54 million customers. Around 76 million of the household have a smartphone. Either at the husband will have it, or the wife will have it, or the son will have it, or the daughter would have it. So one person will have a smartphone. And through that smartphone, they have the access to transact digitally. We have seen that, we have done that, and it has really empowered. And we are looking at taking digital technology to the last mile, not only because we want to help them just do a transaction, but it is an empowerment tool. In our organization, we have created an app for the customer, which creates a lot of transparency for the customer. She can check on her loan, she can check her loan track record, she can check how much outstanding is there. She doesn't have to depend on the field officer just to know what is her repayment date, what is her outstanding and stuff. So that is an empowerment stuff. She can request for additional loan, she can register a complaint. So that's a great tool that is there. It also brings a lot of transparency. When she is making a payment, she can immediately check from the app whether her money has been correctly deposited in her loan account or not. So it creates a lot of transparency. But this journey has not been very easy. I think we have to understand and realize that while we want to collect digitally, we want to have more digital penetration, the ecosystem also has to have digital payments. The entrepreneur at the bottom has to have digital revenue. So we have helped them. I think companies like Inderjit sir's company and other companies we have partnered with, we have created a QR code for the entrepreneur's work, the job she is doing to accept digital payments so that she is able to repay digitally. And I think the data is very funny. I think anecdotally we will feel that our organization coming from Kerala, which is a highly financially included space, so there the digital transaction would be the maximum. But it's the contrary. It is there, 27% of our borrower pay digitally, but highest penetration of our digital transaction is Bihar, where 44% of the customer pay digitally, and 27% of the customer pay digitally in UP. So these are the leading states, and I tell you why. The reason is because the customers who are staying in Bihar, they have some member of their family who's working in Delhi or Mumbai or someplace, and they're remitting money through UPI to them, and they have that digital currency available. And it's also a need of the field officer, because the branches of banks are scarce. If he collects cash, he has to go to the bank branch and deposit. It takes a lot of time. But if he takes digitally, the money directly goes into the bank account. So it creates ease for him also. So there are a lot of wins in terms of taking this to the next level. I think microfinance as an industry, it has been talked about so much. Financial inclusion has been our agenda for so long, which will continue to be our agenda. But I think we need to embrace the digital inclusion also. I think a lot of good work is being done by microfinance institution in terms of creating access to finance. But I think just giving a loan, it does not mean that the person is financially included. I think unless or until borrower has or the rural household has the access to all the facilities that urban families like ours have, like saving, remittance, insurance, financial education, everything. I think then, till then we can't call it like fully financially included kind of economy. I think that is where the role of the microfinance is. That is where I think a lot of work can be done, because today, I think biggest strength of the microfinance is, and we talk about it, we might have an AUM of 4.3 trillion, which may not sound very big in terms of the overall financial ecosystem. But if you look at in terms of the customer base that we cater to, around 6.5 crore, 8 crore customer base, that 8 crore household that we are catering to, it's a huge number in terms of an economy. And as Inderjit sir said, and these customer class is very, very aspirational. They want more products, they want access, they want more sophisticated services. And as more and more evolved ecosystem players are coming into this space, I think the aspirations of these customers are getting met. I think gone are the days when people used to take only loans, as Inderjit sir also mentioned, that only to buy a cow. I think nowadays people are taking loan to set up a shop, set up some sort of a business that their kids want to do, because the same family doesn't want their kid to be in the same state. They want their kids to progress, and we have seen that. Again, an example, a friend of mine, he comes from Bihar. He wanted to start an educational institution. He went back to his roots, and in Champaran, he started an education institute. He wanted Hindi to be the language, so he started a Hindi medium school. He came back to me after a year and he told that he's finding hard people to take admission into a school because everybody aspires to be in an English medium school. And that is the aspiration level of our borrower. We need to recognize that, we need to understand that, and we need to innovate to provide those services to our borrower. I think a lot of services can be taken down to the last mile if we use our technology and use our reach effectively. Things have really, really evolved. I think Mahajan sir told me to talk about it in terms of our operating structure, how it has evolved.
Sadaf, you have 2 minutes.
Yeah. How our system has evolved. I think gone are the days where the operating cost of the microfinance institution used to be 12% or 15%. Now, on an average, it is around 6.5%. Larger one operates at the spectrum of 5 or less than 5, and the smaller one operates at around 9-8% kind of an OPEX cost. I think if we use technology effectively, that cost can be brought down further and more benefits to our borrowers can be passed on. There are a lot of innovative ecosystem players who are there. Like, for example, we have taken e-clinics to the last mile. One of the biggest challenges that our customer have is that they don't have good health services available at that rural household or rural areas. And in our ecosystem, we used practos or of these kind of to consult doctors during COVID. I think learning from the same, we have created those kind of facilities at our branches where people can consult doctors from the branch itself, and the doctor is sitting somewhere in Delhi or somewhere and they are consulting. So those medical services are also available. I think these kind of innovation more and more are needed. I think we can serve our client better. The only thing that we have to remember that we are not only a lender to a player, we are here for a mission of inclusion, and we have to do our act responsibly, and that is what I would like to end with.
Thank you once again, Sadaf. You know, it was music to my ears to hear that Bihar is the leading digital transactions state. You know, for someone who did his graduation in development from Bihar, I always feel happy that Bihar is leading in many, many respects. Also, at least at one time, it used to be the highest in terms of repayment rates. I think it probably maintains that. It also has a high density of self-help groups, more than 10 lakh self-help groups, thanks to the Jivika program. So many interesting things. But to stay with the point that we started with, the Viksit Bharat theme, which is in some ways the Indian version of sustainable development, we heard from Inderjit the change on the demand side, the aspirational difference between Gen X and the previous type of borrowers that we started with, who just emerged out of poverty. And we heard from Sadaf the changes on the supply side, how from old style lending in cash, recovering in cash, to we have moved significantly using the entire digital public infrastructure in the country, and many other possibilities beyond just the transactional infrastructure, things like using Practo for medical consultations. So we can see that in the path to Viksit Bharat, there are changes happening on both the demand side and the supply side. And I think our role as the sector is to be sensitive to those changes and to find an orderly way to continue to match them. And the point that both of them made, to match them at reasonable transaction costs so that, we can provide this service to a lot of people. One last point I do want to mention is that we repeat that we reached 6.5 crore borrowers. It's not quite known how many of them are unique households. My own estimate is that it's about 5 crore unique households, because there are sometimes more than one borrowers per household. So given that India has 33 crore households, and let's say the top, 12, 13 crore are not microfinance borrowers, we still have reached only about 25% of target and near target households. Likewise, in terms of our outstandings, while we can be proud that we are reaching close to 4 trillion rupees, but the net bank credit of the banking system has crossed 200 trillion rupees. So we are at 2% of the sector, but we have to cater to 20% of the population. So we should know where we are. But let me now invite Mr. Amit Srivastava, who is Chief General Manager in Punjab National Bank, a great institution which has had chairmen like the legendary Prakash Tandon, and more recently, although already 10, 12 years ago, Dr. K.C. Chakrabarti. Amit represents an institution whose outstandings are 2.5 times the entire microfinance sector. They are more than 10 lakh crores. And yet, they are paying a lot of attention to the agenda of the future, particularly related to becoming a climate-friendly institution. So I would invite Amit to focus more on that side of things rather than on the microfinance business side of things. Thank you, Amit.
Thank you, sir. Before discussing about what at PNB we are doing for the climate risk part, first let me set the context. As one of the speakers at the earlier session spoke that, am I audible to the last one? So somebody told from here that it's audible. But at that time I was sitting there, and it was, practically speaking, it was not audible. It was not clear exactly what are being told here, are discussed here, are presented here. So this is one of the part basically down the line in the strategy, what we call basically the pyramid, the lower part of the things. Are we reaching to those peoples or not? Somebody in the front one said yes or nodded the head, and things go on. But really it reached there, I don't know. So this is one part. Second part, as far as the Taj Mahal that we see, or as far as our house is concerned, we see, we do the painting, Diwali time is there, we do the painting every year, furnish these things. But how often we look at the base, at the foundation? Every year we are doing the coloring there, but what about the foundation? So at this pyramid, at this foundation level, are we serving to those people? And I'm glad that when I was invited for this microfinance sectors, as far as this part is concerned, we are actually reaching out to those people who are at the bottom of the pyramids. And unless and until we reach out to those people, what we are all talking about, the sustainability part, that will not go. So we have to reach out at a reasonable cost, and we have to do a lot many things to understand their behaviors, to educate them, and to serve them accordingly. So this is just the one part. Coming to the second part, I am taking a quote from the mythology. Varaha avatar was there. So Varaha avatar basically kya? Earth डूब गई. Are we again going to those levels, sir? Are we consuming too much? Our emissions are taking that much shape that things are really changing at fast. And why are we worried about 2100? So from Vara Avatar, have we learned something? Are we are changing to according to that? Or is it the time that alarm bells has to be ringed? Coming closer to this Delhi part, as far as today's air quality in Delhi is almost poor and moving to the severe categories. So air quality is not proper. So actually what is happening basically, the emissions are going up. We are consuming too much. That consumption is not sustainable as far as the present range is concerned, or present technology is concerned, or present approach, our approach towards the environment is concerned. So slowly and slowly these emission parts are taking up. And it will start from our health to all this ecosystem will get disturbed and things may move in a dangerous situation. Before that, some promises we have made to ourselves itself at different panels. As far as the India is concerned, 2070 we have declared that by that time we will be zero, net zero. And as far as the 2030 as a milestone, we have given that certain part of our energy generation will be from the renewable sectors. So certain things we have committed to ourselves. Based on that, what at PNB we have started and other organizations have also started, that I will share with you, and you can also engage with me afterwards also, where we can take it forward also. As far as the emission parts are concerned, technicalities if I go, there are basically three parts, scope 1, scope 2 and scope 3 is there. What is scope 1 is? Scope 1 is basically what we are emitting. Maybe as a carbon or a nitrogen or whatever way we say, emission part is concerned. So scope 1, what we are basically emitting. We have a vehicle and we are using that emission comes to us. It is as simple as this. What is scope 2? Scope 2 is basically the energy consumption that we are taking. We are buying energy, we are purchasing energy. Electricity that comes from which source? It is coming from coal-based, fossil fuel-based, or from the renewable sources. So that is the second part that we have to calculate. And the third part is the scope 3. Those who are associated with us, like vendors, plus our finance portion, finance emission. We are lending or we are investing. In that, the project that we are investing or we are lending to, the emission happens at that level is basically comes to the scope 3 part. So before reducing these emissions, as far as that concerns is there, we have to first calculate this. Based on certain theories, certain parameters, certain data available at us, we have already calculated as far as the banking part is concerned, the first bank, to calculate all the three, scope 1, scope 2 and scope 3 we have calculated. Scope 1 and 2 we have calculated based on GSG protocol, and scope 3 we have calculated based on the PCAP, that is world accepted platforms. So unless and until we calculate this, then after we will decide the path we have to take, and we have to engage with certain international agency which path we are going to take and how much time it is going to take for the net zero. So based on these calculations, we will be moving forward. Now here comes the third part, that is scope 3 finance emission. Here, whatever we are lending, here we can engage with the microfinance institutions. Because as far as microfinance institutions are concerned, they are basically engaged in the lower strata and it actually fills with the sustainable part. If you go by the SDG 1 to 17, it almost touches each and every part of that. So whatever lending we will be doing to that microfinance institution, they can on lend to the borrowers subsequent to that, and they can basically showcase that these are being lent to those societies, those persons. And so it can be classified as a green finance or a sustainable finance. Where the resources will come? Resources are basically come from the markets. There are two things. One is the international market or the bond market, whatever we call, that is sustainable bond market. Second part is we have to raise the deposits. And deposits, as far as RBI is concerned, RBI has already come with a circular for the green deposit bonds, where they have defined it. Whatever the deposits that will be raising, it will be a normal deposit like any other deposit, up to the 10 year, ranging from the 7 days to 10 year. But it has to be earmarked separately, and it has to be matched with our green finance part. Means within a ALM, we have to develop a sub-ALM matching these parts. Whatever deposits we are raised as a green deposit, we will be lending to the green finance. So here we will be looking the opportunities to whom to lend, and one of them can be the microfinance institutions also. Whatever being left out, we have to park it temporarily with the RBI 1 year T-bill maximum, and within that period we have to again. As far as the lending part is concerned, there are 9 sectors RBI has already defined. Within that we have to lend it, and we have to comply with those. Now comes the third part. What about what are all those things that can be declared green, basically? Or will there be a green washing? Like if I say that I am financing for a solar panel for renewable energy, will that panel cost will be covered in the green finance, or the battery attached to that will also come under the green finance? Same way, if I am financing from a pump that is run by the solar, so whether that solar panel will only be considered for that green finance, or that pump will also come, and along with the irrigation system will also come into the green finance part. So these are the things where still technicalities are involved. And as far as the government of India is concerned, the taxonomy, what we call green taxonomy, it is yet to come. Discussions are already taking place at senior level. Green taxonomy part is yet to
Amit, 2 more minutes.
Sir. Green taxonomy part has to become, so that we can basically classify according to that, and it is not being misunderstood that it is going as a greenwashing part. And last is basically related to the microfinance institutions also, and as far as the banks part is, where the difficulty is, that is the impact analysis part. Impact analysis part is a must in the sustainable finance. As far as the sustainable part is concerned, what are all the impacts are there and how big that impact is there. Based on that, the finance rate will be ascertained as far as the banks are concerned or international funds are concerned. So we have to develop the strategy how to calculate this impact analysis and showcase to the international world for the finance part or the funds available to us. Thank you.
Thank you, Amit ji. Jago sone walo. Normally the word green in our sector used to mean evergreen, which was a bad word. But now we have the same color with a positive connotation, and I'm very thankful to Amit ji for elaborating so quickly but so comprehensively the entire scope of how an institution has to look at itself, the scope 1, scope 2, scope 3 components of its carbon footprint, and then having identified it, how to slowly reduce it and hopefully one day turn carbon positive. It's amazing that Punjab National Bank has taken the lead in this. All of you, of course, have investors also on your liability side, and while banks will still take some time to catch up even with Punjab National Bank, but I can guarantee you that your investors will have all these checklists for any investment that you're seeking, because the investors, mostly abroad, tend to ask these questions. So let's get ready and start taking a green view of our things, not evergreening, but sustainable green. With that, let me introduce you to Purvi Bhavsar, who is from Pahal Microfinance. And in the conversation we had in the speaker's room before this session, I was very pleasantly surprised that she and her institution are very deeply and passionately involved with doing, sort of microfinance with a not just a green touch, but green depth. And Purvi, I'd request you to describe in some detail what you do, how you do it, but also why you do it, because you did touch on it in our conversation. Thank you.
Thank you, sir. Thank you for the opportunity on being on this stage and talking on something which is I'm personally very passionate about, and I feel as an industry, if I talk very much only from the microfinance point of view, I think all of us should be interested, not just from the challenge point of view, because that's what we keep hearing most of the time these days, that because of the heat wave, the collection efficiency dropped, or because of the floods, we are having issues here, or the disbursement is not happening. So we always hear a lot of negative things related to climate, but I also want to talk very briefly about the opportunities that is there for the industry. So since the subject is comparatively new, I'll take few minutes to talk a little bit on the technical side of how the climate thing is being seen, or how it is impacting. So on climate side, there are two things very important. One is the climate mitigation and the other is climate adaptation. Mitigation is broadly where we, mostly the government and the bigger agencies are trying to prevent the green gas emissions and reduce the carbon footprints at a higher level, which requires huge capital investments, talking about big projects like, the renewable energy and hydrogen kind of things. Climate adaptation is where I think which should be of interest to us. As I already said, from the challenges and from the opportunity point of view, because all our customers, and I'm saying all our customers by default, because they are in the bottom of pyramid, they are quite vulnerable, they don't know what is going to hit them, they have no safety net, and they don't know how they are going to deal with it. So from the adaptation point of view, there are 2-3 things that microfinance institutions can look at. One is we can look at being part of some sort of an infrastructure creation. And we are not talking about, building some big infrastructure, but for example, the severity of the floods or the frequency of cyclone or the severity of the cyclone, we won't be able to control. So how do we help our borrowers deal with those kind of events, which is likely to happen more frequently, and it is definitely going to impact their livelihoods, their whatever little savings that they have. So, things like pakka house or proper roof or some sort of a water storage, water management system, those are the kind of infrastructure things that can become microfinance's portfolio, where we very consciously make an effort to support our customers to deal with this climate impacts. Similarly, we can also do something on the agriculture. Since 70% of our portfolio in our microfinance is in rural areas, most of the people are in some or the other form directly or indirectly linked with the agriculture. Either they are the smallholder farmers or they are the farm laborers. And if we can be a part of that cycle where we are able to fund the smart agriculture, and smart agriculture would mean, funding for the smart seeds or better water management technologies, or, connecting them with the warehouses, cold storages where, they can get better prices. If we can become a part of that entire value chain, there is a huge opportunity. And while drought is a risk, flood is a risk, but there is an opportunity here. This also means that there is an opportunity to do a lot of meaningful partnerships. And we may not want to address this challenge or opportunity on our own. And hence, making some meaningful partnerships, like, for example, partnership with agri-tech companies or insure-tech companies or water-tech. There are a lot of technology companies available. And we know for the fact that being microfinance, we have a limited things on technology, and we will never be able to explore or invest so much into different kind of technology. So making meaningful partnerships and being a part of farmers' journey can also be a huge opportunity. Third thing could be, some sort of we becoming a part of creating some community resilience. And since microfinance is always considered as a very high human touch model, we have in access to so many borrowers. Like we meet up with, I don't know how many crores of household at least once in a month. And in a way, it's a logistical nightmare, but I think that's a big opportunity also, that we are able to touch base with our customers at least once, if not more. And that opens up an opportunity for us to play a very important role in creating some sort of an awareness. Because the biggest issue with the borrowers that we are dealing with is they are the ones who are getting impacted the worst, but they themselves don't know. And they don't know kya kiya jaye, what should they be doing. So we can play a very important role in creating awareness, in creating education, and as Sadaf was saying that, creating some sort of a health infrastructure. We become a part of their struggles, or we become a part of their requirements. So these are four things where I see climate can also become an opportunity. Also small but important part of climate is the transitioning. And there also lies a huge opportunity for us. We have always been predominantly focused on creating livelihood for our borrowers, but I think now is the time when we also look at the larger universe of the opportunity, and transitioning can also become an important part. And transitioning would mean that you are moving from fossil fuel to the better, cleaner energies. So maybe the solar or any form of cleaner energies, or better water management system, building dams, and creating some green jobs. And third, and I think the most important for this forum, is we can play a huge role in some policy advocacy for this set of customers. So climate is a huge challenge. How we are going to deal with it remains a question. We are going to hear a lot of new terminologies, like we will have to deal with a lot of climate refugees. And in a lot of geographies, I have seen that during the heat waves, a lot of our customers are migrating. So right now that migration is temporary, but the kind of migration that we have seen, like for example in Joshimath, where because of the issues in the there were cracks and people had to migrate. So how are you going to fund those people? As an industry, we are always supposed to be funding the bottom of pyramid, vulnerable people who do not have so much of credit. So how do you fund people like climate refugees going forward? So those are the kind of things that we will have to start talking, start thinking, and start working upon. But before I close what I had to say, while we are working with such vulnerable set of people, we ourselves also become very vulnerable. So I think at an industry level, we also need to build safety net for the institutions like ours, who automatically will be very vulnerable when they are dealing with the customers, vulnerable set of customers. And I'm just using this platform to give one suggestion, which I think, we because of our passion and because of our connect and our desire to contribute on a much larger thing, we are trying to pilot a lot of products. So some of them work, some of them really don't work. There is a long period by the time you conclude whether it will work or it will not work. I had suggested this earlier also. If we can create some sort of a sandbox at an industry level where we can pilot a lot of products, because unless any product is sustainable and scalable, people will not be interested. And last, I think green is good. There is a lot of money that is available. Whosoever is seeking funds, I think there is no dearth of opportunity or the funds. Only thing is it requires a lot of effort. And the first effort is doing a lot of documentation, creating the milestones, giving proper data, getting audited properly, and then the opportunity to create funds is immense. There is a lot of possibility where, there are various kind of bonds available in the market. Very recently, I have come across something called orange bonds, which are like climate and gender bonds. And last time when I heard, I think about 2 months back, the issue was for about $100 million. It was oversubscribed by 7 times or 8 times. So, so that is the kind of interest and availability in the market. Only thing is, I think we as industry should put our act together and not overly focusing only on the challenges, but on the opportunity also. I think that will be a good way forward for us. Thank you.
Thank you. Thank you, Preeti. I'm sure you all heard that the orange bond issue of $100 million that Preeti referred to, Purvi referred to, which was a combination of green and gender, was oversubscribed 7 times. So that gives you an example of where the investors are moving. She also, of course, talked at the other end of Joshimath and the forced migration that is happening there due to literally the earth slipping under the feet of the people living there for decades. She used the term climate refugee and gave us some insight into how the demand side of this is getting created. I think the challenge to our sector is obvious, which is how do we match this arising demand with the supply that is beginning to come, and how do we do it in an orderly manner. Let me now move on to Professor Susan Thomas. Susan was for long with the Indira Gandhi Institute of Development Research. Way back in 2014, along with Professor Renuka Sane, Susan did a paper on the Andhra microfinance crisis and its impact on the poor. In her terminology, it was quote-unquote a natural experiment because something was done in Andhra and nothing was done regulatorily in the neighboring states or in the rest of India, and therefore they compared the NSS data on household consumption. And I still remember that paper and the data. Susan, if I'm not wrong, you demonstrated that household consumption in Andhra fell by, among the poor, fell by 19%. 19. And that within that, educational expenses fell by 17%, and food expenses fell by nearly 38%.
Yeah, so
if there was, sorry, you can correct me the numbers, but if there was a proof that that was a very poorly thought through action by a reactive state government, that proof was available rigorously and academically from 2014. It took another 7 years for our Supreme Court, not 7, 9 years, in 2023 to declare that law unconstitutional. It is a Pyrrhic victory because obviously what had happened had happened. The sector at that stage had lost 7,000 crores. And since then there have been many other these enforced loan waivers. But as Sadaf said, everything changes, but it looks like nothing changes. Neither on the political behavior side, nor on the lender behavior side, nor on the regulatory behavior side. But I hope we will learn. And so with that preamble, Susan, I just wanted to assure you that somebody does read your papers.
Yes, I haven't heard the word natural experiment from a non-academic in a very long time. So thank you very much.
Half an academic.
I can see that it rankled. Thank you all very much, and thanks to Sa-Dhan to invite me to this panel. I have worked a very long time ago in the area of microfinance, but I've never lost touch with what it's doing because I think it's a critical and important sector in this country for all the reasons that we've heard so far. I just want to take a minute to explain the name of the organization because I know people will not remember it otherwise. So we are called XKDR. The K, D, and R stand for knowledge, data, and research. The X is the important part of our name because it stands for cross-disciplinary. Everything that we do, we hope will have an impact in the real world. And we think that economists by themselves never really manage anything. So we are a group of people who are economists, data scientists, lawyers, political economists, and we work together to think about the problem. I actually thought that this is a lovely conference to hear because I think for the first time, and maybe this is not obvious to all of you, but for me, it seems that this conference has got a really nice focus on growth. And that will not the growth of the sector necessarily, although I know that my panelists are all people in the sector. I think that the focus when we started the inaugural session was growth of customers and their households, right? And so it's an obvious thing that if we focus on the growth of the customer, obviously the sector that serves a growing customer base or a growing customer itself is going to grow. And we've got hard evidence of this from the last 30 years. That the country has grown, people have grown, and this sector has just blossomed. I mean, so I don't think that that's anything that is disputable. The question that often comes, and I think this is where the tussle is between regulator and policy as well as the industry is, of course, growth of the customer is going to happen because the country is growing so rapidly. What we need to establish is, does the financial sector's participation in the life of the customer help the growth happen faster as compared with if the customer did not have any growth at all, finance at all. So if I may just take you through a little bit of history and my summary of what has happened in the microfinance sector. When microfinance started, as Vijay mentioned, this was in the 2000s, the country was a lot poorer, right? And also the amount of technology access that we see today is very different from the kind of technology access that we saw at the start of the century. So when I think about the growth of the microfinance sector, I think that it has already gone through two phases of innovation. So why is it that microfinance actually took off the way that it did in 2000? So I think the first innovation was just the ability of the microfinance sector to put feet on the ground, to physically reach the last mile and touch the customer. And there, what the feet on the ground did was do due diligence in terms of who's the customer that we're lending to, and that was an advantage and an innovation. And of course, the collection. So both due diligence and customer collection was something that benefited greatly, and that was the first phase of innovation from the microfinance industry. We've seen a second phase of innovation from the microfinance industry, which is running on the back of growing access to technology and communication platforms. So today, it's not that we need feet on the ground to either do due diligence or to do collections. It is that we have electronic platforms and payment platforms that can do this for us. So what's the next phase? Right? I think that we've tapped out in terms of understanding how to deploy digital platforms and payment systems for the growth of the microfinance industry. And now the question is, what is it that we should innovate on doing going forward? I think most of it is people are exploring the use of digital technology platforms to deliver the finance itself. Right? So we have fintechs that are coming in to say that you don't need brick and mortar structures. You can have customers onboarded onto a digital platform, and that's how the growth of the industry will happen. But what is concerning when you look at what microfinance is doing today and where there is a lack of innovation is in the kind of products that are being offered. Today, you're still offering things like loans, small ticket items, short loans. Some of them is collateral, like Muthoot has done beautifully with using gold as an asset that all low-income households will have. But at the end of the day, that presents an upper bound on what it is that you can do for the lower-income households. There was a lot of concern that was expressed in the inaugural session from the regulators saying, if loans are the only service that you provide, then you have to start worrying about the indebtedness and the ability of the households to pay back. So it can't be that we can grow at the rate that we have grown in the past if we don't innovate beyond just the notion of digitally providing loans or credit, even collateral on small-sized assets, and doing a collection based on digital payment systems. So where is it that you're going to get the next level of innovation? And here's where I'm going to see that what is something that you can see for households which are low-income households is they are desperately in need of, and I think I would echo Purvi, that low-income households have a lot of risks, and credit is not necessarily always the only way. Is this working? Yeah, great. So credit is not necessarily the only way, right? And the first thing that most people will think about, as Purvi said, is insurance. How do you detect what is the risk that a household is seeing and what kind of insurance can you provide? So I think that there is very little presence of insurance for low-income households. The insurance companies today are loath to give small ticket items to low-income households. Health insurance for the poor and for the far away, that is people who are far away from the physical presence of the brick and mortar structure, is almost non-existent in India. So people who are poor cannot get health insurance very well. And of course, if you go to the rural areas, pension product coverage is also non-existent. Now, most of the times people will say we need to understand the customer before we can provide these kinds of services. But that, I think, is something that we should think about. And so I think that new approaches that AI is using is a tremendous way to overcome information asymmetry between the customer and providing them either health insurance or insurance, life insurance, or things like pensions. So what is my proposal for a phase 3 of innovation and growth for the MFI sector? It is to prepare yourselves as organizations, start thinking about how to use AI to provide true innovation to low-income households. And what does that take, right? So what is needed for any organization, and anyone on this panel is already running organizations that has very many customers that they touch. So you already have the customer base. So what is missing if you need to think about who are these customers and what kind of financial products to innovate for these customers and provide it? So the first thing, and this is the first step in all AI systems, is you need to build an internal MIS system about your own customers. And it's shocking. I've had some experience dealing with MFIs and other financial institutions in this country. But the awareness of who the customer is limited to just the kind of product and the kind of transactions that you share with your customer. There is very little knowledge about who the customer is. And if you don't have more of knowledge about who the customer is, it is going to be impossible to provide new services to them. So hearing Purvi speak about the Pahal experience is fantastic because it required to understand a little bit more about who the customer is. So step number 1 is build internal MIS systems about your own customers. 2, use this data to identify the vulnerabilities of these customers and what kind of financial product can make them resilient and strong. So what have we been doing in our work? We've got a little bit of work on financial inclusion that we've been doing over the last 3 years in collaboration with Dwara Research Foundation. So both of us have presented in December 2022 at the Inclusive Finance India conference a new framework for measuring financial inclusion, which taps into knowledge about customers and their households. We call this the Dwara Research Foundation XKDR Forum Financial Inclusion Measurement System, which tracks
another couple of minutes.
Yeah, thank you. Which tracks 3 things about the households. How much are they financially accessing? How much are they financially using? And given that they are using and accessing the financial system, how resilient are these households to shocks? How confident are they that in the future, when there is a shock or when then there is a need, how confident they are about sustaining themselves? What was nice is that we got to work with 10 MFIs who gave us data about 200 of their low-income household customers. And we found that each of these customers have very varying degrees of either accessing financial instruments, and it's not just bank accounts or insurance, right? It's about 10 products. And we found that those customers that had more finance and used more finance were actually more confident in how to withstand shocks in the future. So what we have at the end of this exercise is that there is hard evidence to show that if you're able to collect information about households on their access, usage, and their confidence about withstanding shocks in the future, those households that had higher financial access and higher financial usage had more confidence in how to face the future. So this I think is, we feel that it is something which gives us all hope that what we are doing by way of including people into the financial system is actually something that gives them confidence on how to live their life better. So I just want to summarize saying, what does it take to do this, right? As I said, for the MFIs, there is an investment that needs to be made in being able to track information about your customers. Now, a lot of people think this is very expensive, that you need to know everything about all your customers, but that's not necessarily true. What we did was we ran a survey at each MFI's customer base of about 200 low-income households. This is something you can do, right? It doesn't require a lot of budget, but it does require focus and a team to be able to do this. Once you start collecting this information out of surveys, it has to be done periodically, it has to be done regularly. Otherwise, you will not see how it is that your customer's journey through financial inclusion is improving or not. So this is something that is an investment that has to be done by the MFIs. As I said, it's not about money. It is about saying we need to do this because it's good for us, because we understand our customers better. And if this is done, it's something that you can showcase to the rest of the world. More importantly, your financiers, the people that give you money to grow your business, as well as the regulators who might question whether you are harming your customers or it is something that is improving your customers. I have one last point for Sa-Dhan. As an association, there is a unique position that Sa-Dhan has to build in knowledge about what other countries and other institutions are doing by way of building models based on customer databases to innovate products for customers. So I think that if we get our act together and we make these little investments, my sense is India can be a leader to the rest of the world on how to do financial innovation for low-income households better. So this entire pitch towards financial or inclusive financial growth, it's something that India is well poised to do because we've got the human resources and the talent that can do this more than any other country in the world. Thank you.
Thank you so much, Susan. So these days you can't be at any conversation without AI not being invoked. So it was invoked. Thank you, Susan, for mentioning it. Even though its long form is artificial intelligence, but really I think we should start thinking of it as augmented human intelligence. You know, to think of it as artificial intelligence is kind of very problematic. But thank you, Susan, for reminding us that we need to restore the natural language meaning of the phrase KYC. Know your customer has a natural language meaning. But the way we use KYC, iska KYC kar do yaar. You know, that's not what is meant by KYC. Know your customer, the way Purvi, for example, was talking about them, you know, know them in their ups and downs, their vulnerabilities. And thank you also for reminding us that those, and by the way, this is a gold medal for the sector. Yep. When a respected academic very rigorously makes the statement that those who had higher financial access and greater financial usage tended to have a greater ability to deal with shocks, what is called resilience, to come back to the climate discussion. So thank you very much. And with that, we come to the end of all the panelists. I was told by the organizers that we need to wind up in a couple of minutes. But after that, there was going to be a felicitation function for all of us. So I am, as chairman, saying no felicitation, no time wasting on formalities. Let's use that time for, yeah, so, but may I just use some time to take at least 3 questions from the audience? Thank you. So one from that side of the lights, one from this side of the lights, and one from that side of the lights. Yes, sir. Come over.
Hello. Yeah. Thank you, sir. This is Sachin Agarwal here. Love to hear Purvi ma'am and Sadaf sir what you mentioned, and Susan's ma'am in terms of the InsurTech, climate tech, and financial services collaboration, because honestly, before today's event, we usually saw MFIs more from a very traditional perspective, but if this is the degree of collaboration the industry is looking at, then it'll be really interesting to have more dialogues around that. Thank you.
Thank you. So I'm glad that something new came. Anybody from that side?
So may I?
Sorry.
Yeah.
Okay.
This is Dr. Anita from ICFI Business School, Hyderabad. I just have one small query. Beautifully presented panel. Thank you so much for, bringing so many issues together. One question which perhaps we could deliberate on is, how do we integrate the policy makers, the academicians, industry experts, come together, work together to have a common goal, working towards the sustainable, say, microfinance? That's my query. Thank you.
Well, maybe I should use the chairman's prerogative to answer that question, but let's hear the third question, if there is any. Yes, please.
Yeah. So my question is, picking up from where Mr. Camotra talked about self-regulation, which is, as you said, required in the industry given the current circumstances. So my question would be, has the panel, or rather has the industry thought of any particular timeline by when the self-regulation will sort of start kicking in, or the companies would have to abide by it? And secondly, when we see that the stress that has actually emerged probably has been a little bit more than was earlier expected, is that stress going to sort of last a little longer than we had initially expected? Or, that's, as you said, if the rates are normalized or if the rates are actually brought down, that would take care of it.
I think that's a great question. With your permission, Chairman, sir. The microfinance industry has already got a jump start in this area. We have 2 approved self-regulation organizations. One is Sa-Dhan, other is Microfinance, MFin. So as an industry, we have already taken a head start with the regulator to have ourselves empaneled as the SRO. See, that's the title. Now, what happens below that? We heard Mr. J.K. Das this morning from the Reserve Bank, and we interact very, very closely with them, and the Ministry of Finance under the DFS. People on this panel are on various committees and subcommittees with the government, straddling different types of entities: the regulators, the lenders, the social sector, the climate responsible cohort of India. So we actually meet fairly often to decide what and how to regulate. Paul Thomas is in the hall. He chairs us at the moment. The banks we have met. We've all met. And it's hurting us at the moment to not have self-regulation. So we have put up some guardrails for ourselves already. Our microfinance units have started following them 3 months ago. And I mentioned what are these. Not to go beyond the 4th lender for sure. 3 is the ideal number. not to go beyond 1.75 lakhs for sure. 1.5 is probably a better number. So we have some guardrails with which we're working. The KYC, Dr. Susan said, is very important to us. And not just KYC Kardo. We want to know how this woman's journey is evolving, how and what demographic sector she comes from, what her children are doing. When our loan officers meet them every fortnight or every month, we take this data. We feed it into a system because we require it for priority sector lending also. So with that, we make slices and dices of what we have to do next with this household. I want to assure the team, not enough has been done, but a humble start has happened, and I think in the next 2 quarters, we will sort it out.
Thank you very much, Inderjit. In a sense, he has answered your question, madam, as to what we all need to do together. Indeed, the regulators, namely the RBI, but also, the IRDA, the PFRDA. By the way, Susan, you forgot to mention pensions as an important financial service, as the nation's growing older, and the poor are also growing older. So they need to come together, but more importantly, the DFS, which is in some ways the regulator of the regulators, actually is a more important place for policy advocacy in the G. I know from my experience, because the DFS actually deals with, being in the government, they deal with the parliament, which the regulators are much more guarded from. So, a lot of the issues that pinch you are often better understood by DFS. Whereas from the regulator, the response is, bhai, this is our current wisdom, dekhenge kabhi. Committee established karte. On the SRO, I found it a bit curious that you were saying, when will the SRO start kicking in? Well, it's like, oh, we got self-regulation, who will come and regulate me? It's an oxymoron. We really, the problem has been not that there is ineffective SRO, but there was partial SRO, and what Inderjit said is delightful news that the banks are now moving towards joining that may not be that very SRO, but at least the idea of self-regulation. Because ultimately at the borrower's level, it's all integrated. The exposure is integrated, and the over-lending gets integrated in terms of over-indebtedness. And in all of this, the role of research by academics, deeply involved academics like Susan, who have no axe to grind in terms of institutional agendas, is extremely important. And we must listen to them, we must give them opportunities to come and understand our work, look at it cross-sectionally, longitudinally, and keep giving us the benefit of their analysis and knowledge. For me, this was quite a delightful panel because, to hear Punjab National Bank, the grand old institution, to take the lead in change, to see how Muthoot has become digital so much and doing it best in Bihar, to find surprising passion for climate-related work at the microfinance level from Purvi, the words of wisdom from Inderjit, and of course, sharp analysis from Susan. Thank you very much, and I hope you enjoyed this panel as much as I did. Thank you.
Absolutely. Thank you so much, sir, for that very enriching session. Ladies and gentlemen, a huge round of applause for all our panelists in the session. And due to paucity of time, we could not take the discussion forward. We could have taken a few more interjections, but we can always do that offline. Thank you for being such a great panel. We'll take just a moment to thank our panelists for their knowledge and for their efforts that they have shared with us. May I request MD and CEO, Satya Microfinance, to kindly join us on stage, Shri Vivek Tiwari ji. And may I also request Mr. Gigi Maman to kindly join us onto the stage and present a memento to all our speakers. We had a short presentation by partner PwC. May I request Mr. Vivek Belgavi to kindly join us onto the stage. We now present a memento to all our speakers, presenting a memento to our moderator of the session, Mr. Vijay Mahajan. Thank you so much, sir. Presenting memento to all our esteemed panelists. Ladies and gentlemen, this hall can brighten up with a little more of applaud, which just brings in a bit of energy. We also request Mr. Vivek Belgavi to kindly join us onto the stage. Thank you so much, Shri Vivek Tiwari ji and Mr. Gigi Maman, for doing the honors. Mr. Belgavi has left for something very urgent. May I now request all our dignitaries to kindly step up for a group photograph. Our friends from press and media would capture this moment in their lenses. We take a moment for a group photograph, please. Ladies and gentlemen, with that, we conclude this session and we would be proceeding for our networking lunch. But before we proceed, may I request you to kindly join us back in time for our breakaway sessions. We have our breakaway session 1, 2, and 3. Our breakaway session 1 would be onto the left of the center stage. Breakaway session 2 is this center stage where we are standing at the moment, and breakaway session 3 is on to my right.